Good morning, MMTs. What we're going to show you is what we call VXAPL for Apple. CBOE Apple VIX indicator. It's a fear indicator. Now, I'm going to show you how accurate this is. If I want to buy puts because Apple's going down like we do, or I want to buy calls short term to go up intraday, I'm going to use this. Why am I going to use this? I will show you why. Both of these are 3-minute charts. On the opening bell, this fear indicator went straight up to the highs, and it made the highs, and here's the timestamp. At 11:36 is when it made that high. When that came down in value, we went when this stock was selling off right here. This is Apple, and it puts the bottom in. Let's look at the timestamp in here. Timestamp is right here, 11:30. Now, when the fear indicator in Apple peaked, we bottomed here. This would be the time that you would cash in the put side, because on the opening bell in both 3-minute charts, when that went straight down, when that fear indicator was going straight up, it was telling you to stay net long short all the way to the bottom. Once we got to the bottom and this got to the top, when that reversed, we rallied straight up. Once we pulled back, we had little areas of rallies. Once they start to rally up, this is where you pull back. But once this rallied up again, we had minor pullbacks in here. It's very important to understand what the correlation is in using the Apple CBOE VIX. And this is on a 3-minute level, and you can use them on various different time frames. Now, by understanding where this fear indicator was in Apple, here's the Apple daily chart. When this thing, and you can take a look, I can tell you that this calendar date was on 8/10. And we started a really big problem on this date, on 9/21. When we broke out from this area here, MMT, this is at support level, but now MMT, this is very simple. When that broke to the highs, that meant that that fear was going higher and higher. Yeah, you had some little rallies in there, but it continued to go all the way up here. And other times that Apple has sold off, this fear indicator peaks. Once it peaks and has these big reversals, that's how you got the big rallies up to 705. Now, let's take a look at the Apple chart. It's right here next to it in this video. So I'm going to right click and I'm going to go on the info tool. Right here is where we started to gap down. That was on 9/24. This date right here was 9/21. Right here is the date 9/21. When we went straight up in the fear, you can see that Apple computer went straight down. You make a lot of money by buying the put options all the way down. And as long as this thing is gapping up and going higher on a daily level and on a 3-minute, 15, 60-minute level, it doesn't matter. Apple will continue to sell off. Now, we have a wall of resistance here at 40. And it's still a double daily breakout. When Apple did rally a couple of times in there, this thing had gapped down, but nonetheless, this is where it is. We'll use it for a very short-term time frame and teach you how to use this. Because if you can use what the volatility is in Apple, just like you can on the S&P VIX, well, they're individual names. It's a new instrument. They've been out for a while. I don't recall exactly when they were released, but it was sometime last year, I believe. Or toward the end of 2010. I have to find out, so I'm not going to put my foot in my mouth. I can tell you that we hit a bottom here at 505 on the daily. So, once again, how to use fear indicator in Apple, how to use the shorter time frame charts here. Here it is right here. Here it is. The VIX is breaking higher. You can see right here where Apple computer sold down on the opening bell. They don't lag. This broke straight out to the high, and this broke straight down to the low. When I reversed here, intraday, that was the top. It was time to be net long. I buy the calls here, and I buy the stock here. And as long as this one continues to fall in price, this will continue to rally. When that put a bottom reversal in, you put in a top here and started to come back down, and that's knowing when to exit a trade. Now, it will take some training, but on an intraday level, you're going to be able to gauge when how long you should stay in your calls or how long you should stay in your puts. And there is one on Google and there's one on Goldman, but I can tell you as of today, for the new MMTs, you have to start watching this on a daily level.